NIO has just laid out its strategic roadmap in a recent earnings call, and there's a lot to unpack. The decision to nix plans for in-house battery production over the next 3 years in favor of outsourcing may have raised eyebrows initially, but it seems to be a strategic move aimed at improving gross margins and operational efficiency. The market seems to agree, given the positive reception from investors. A significant part of this strategy involves a 10% cut in the workforce, a preemptive strike against the anticipated onslaught of competition from heavyweights like BYD, Tesla, and other Chinese carmakers. It's a bold move that underscores NIO's commitment to staying agile and competitive in a rapidly evolving market. Adding to the mix is a cash infusion of $2.2 billion from an Abu Dhabi-based investment vehicle. While this injection of capital is undoubtedly a lifeline for NIO, it comes at the cost of a 15% dilution for existing shareholders. Nevertheless, the market seems to be nodding in approval, acknowledging the importance of bolstering the company's financial position amidst a 10.8% year-over-year increase in net loss. Now, turning the spotlight to NIO Day, the company has pulled the wraps off its new flagship, the ET9, signaling its entry into the smart electric executive sedan market. Available for pre-order with delivery expected in Q1 2025, the ET9 aims to make a splash in a market dominated by formidable players. NIO has also flexed its technological muscle by introducing an in-house developed autonomous driving chip, drawing comparisons to the computing power of 4 NVIDIA Drive Orin chips. The strategic prowess demonstrated here could potentially set NIO apart in the fiercely competitive autonomous driving space. Speaking of strategy, the emphasis on cost control and margin expansion is evident in the financial performance update. While year-over-year margins are still down, there are promising signs of quarter-over-quarter improvements in vehicle sales and margins. The outlook for the upcoming quarter, with anticipated deliveries of 47,000 to 49,000 vehicles, paints a positive picture, representing a 17.3% to 22.3% increase from the same quarter in 2022. The key message is clear: a relentless pursuit of improvement each quarter. Looking at the broader market perspective, there's an optimistic forecast with expectations of a 31% to 32% increase in NIO stock over the next 12 months. The average price target sits at a respectable 11%, with the stock currently trading at $8.80 and boasting a market cap of $15 billion. Technical analysis aligns with this positive sentiment, showing recent favorable movements in the stock price. However, as with any narrative of success, cautionary notes are crucial. Investors are advised to keep a keen eye on management's direction, ensuring that the focus remains squarely on profitability. Despite the rosy projections, the competitive landscape is fierce, and NIO's success hinges on its ability to navigate through challenges and emerge as a sustainable, profitable player in the electric vehicle market. As we fast forward to 2024, NIO places a strong emphasis on margin improvements and increased deliveries. This is a critical juncture for the company, especially considering the heightened competition. The market dynamics are shifting, and NIO is positioning itself to capitalize on potential upsides. Factors like lower interest rates, a recovering market in China, and potential government support could act as tailwinds, boosting demand for NIO's electric vehicles. However, a note of caution is prudent. The landscape is dynamic, and the road to success is fraught with challenges. Investors should be vigilant, ensuring that the company maintains its commitment to profitability amid the headwinds. NIO's success story is still unfolding, and while the trajectory appears positive, the market can be unforgiving to those who lose sight of the bottom line. In conclusion, NIO's recent moves, from the strategic decision on battery production to the unveiling of the ET9 and the injection of capital, reflect a company navigating the complex terrain of the electric vehicle market. The positive market sentiment, backed by financial improvements and strategic announcements, is encouraging. Yet, investors are wise to approach with a discerning eye, understanding that success in this industry requires more than technological prowess. It demands a keen business acumen and an unwavering focus on the bottom line. The road ahead for NIO is promising, but as with any journey, the real test lies in the ability to weather the storms and emerge stronger on the other side. Please consider liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.